Hey everybody, I'm excited to welcome you to your August 2020 monthly market report. We're going to be talking about the economy, housing, where home prices are going. I know that's on everyone's mind, and what's causing people to move. So let's just jump right in and get started. This is a quote that I pulled from the Wall Street Journal, and it says that a strong economic recovery depends on effective and sustained containment of COVID-19. Economists said in the latest monthly survey by the Wall Street Journal, with 91% of businesses and academic economists agreeing somewhat or strongly that economic recovery depends on containing the pandemic. So we know we're in August already. We're slowly starting to see the economy recover, right? But the strength of that recovery is how well we do with containing COVID-19. So that depends on, local rules by mayors and government, reopening plans. And really the main thing that I see is depending on any sort of treatments or vaccines or things that are being worked on by scientists and people in those fields. And really when those become available more widely, people are going to feel more comfortable about going out and being able to interact safely with one another. So that's really what this quote is saying. When we can contain and make sure that people feel safe with COVID-19 going on, that's when we're going to start to see the economy really make the recovery. But the interesting thing is that we're starting to get a look at consumer spending. So here is a chart of data that starts from the beginning of the year to July. And when we look at just every industry, it's really unique, right? So grocery stores, for example, we see that grocery stores through the entire pandemic since January have continued to increase, right? So we know that a lot of restaurants were shut down during quarantine. There were restrictions in place, curfews. So really the grocery industry has grown. We see recovery based on the industry. Again, some businesses will recover quickly than others, but we saw that a lot of the businesses bottom out in April and they're slowly making their way back up. So for example, healthcare. During COVID, there were a lot of elective procedures and elective surgeries that were put on hold. So we saw, a strong increase in healthcare, whereas transportation and travel, that's that orange, arts and entertainment that kind of bundles in travel, we saw that those are still, slow. They're coming up, but it's pretty slow to recover just based on everything going on. Taking a look at what forecasters said in Q2, so that's April, May, and June of this year, this forecast was delivered in April. The average based on, Goldman Sachs, JP, Morgan, Wells, and BOA, they all said that we forecast a 31% decrease in the economy. And you know what? They were right. The economy in Q2 did constrict about 32%. So, we're taking a look at what these people said in Q2, but it's also important to see what they're forecasting for Q3. So I want to go to the next slide, and these same panelists from Q2, we'll see the original four, they're on the left, and then I added in 3 additional forecasters on the right, but you can see all of them are predicting between a 15 to 25% increase over this next quarter and then going into fall. So, like we've seen in the last slides, we're starting to see economic recovery happen. And the forecasters who were correct in the second quarter, we're looking at basically what they said and hoping that what they say goes into the third quarter. And there are some data that I want to show in the next couple of slides that will back that up. So an interesting quote by Lisa Shalich: "Indeed, the worst ever GDP reading could be followed by the best ever growth in the third quarter." So that dip down, the dip that we were seeing, we're also noticing a rebound, right? Again, some quicker than others, but this is talking about the entire economy. So that's like your economy update, right, in that first section. But now let's really talk about housing and what everyone is saying about the housing market. So for this next slide, I pulled quotes from a couple different sources, and it's really fascinating what they're saying. I haven't really seen language used like this, so it's really reading like a movie trailer. So, Realtor.com, an astonishing rebound. Housing Wire, shockingly strong. Atom Data Solutions pulled something of a high wire act in the second quarter. Zillow stared the pandemic right in the eye and hasn't blinked. Myers Research has been nothing short of remarkable. So these quotes, it's really funny because all of these are really descriptive of the housing market. And this is not how economists speak. They usually speak in terms of the data and sticking to the data and calling out numbers and KPIs. So this is really interesting when economists are speaking like this. It really sums up how the housing market is, and how the experts are pretty much blown away by the strength and the resiliency of the housing market. Realtor.com, despite the crippling and ongoing coronavirus pandemic, millions out of work, a recession, a national reckoning over systemic racism, and a highly contentious presidential election just around the corner, the residential real estate market is staging an astonishing rebound. Take a look here. We're seeing housing play a critical role getting the economy back on track, right? So, I mean, we've talked about, and you can look online, every time that a house is sold, there's an agent involved, there's an inspector, an appraisal, a loan person, this, that, another. So like all of these assets, like when a home is sold or purchased, it contributes to the economy. And we already know that. But one of the things that we should look at to confirm this is behavior. And the way that we look at consumer behavior is through showing time. And for those of you who don't know what showing time is the platform that is used exclusively by realtors. It's what we log on to. We book appointments. We book our showings that way. We follow showing time because this is an indicator of people going to look at houses. So from this chart, we saw a dip down in late March and April, but we're continuing to see it normalize. You'll see that in the months of May, it really started to pick back up. Now, honestly, I do believe that some of it, maybe a lot of it, is pent up demand. People put their plans on hold in the beginning of the year, and now they're coming back to the marketplace. So I think as we go into fall, we'll see it normalize a bit. But right now we have a ton of activity, and the activity when it relates to showings is really, really strong. Now we also prove that. So we have the showings, but then how do we prove that housing is really coming back, right? So we look at what's called the Housing Market Recovery Index, and it takes 4 different things. So it's going to take demand, supply, price, and time on the market. It gives us like a nice average, and it averages all those 4 things together, and it shoots out a number. So this index, if you take a look at how it's been trending, the index now is reading above the February 1st baseline. Now, that's not to say it's not where it was, if we didn't have a pandemic, this is not where it would have been, but this does show us that we're recovering very strongly in that aspect. Now, with all this said, we have people looking at houses. We have showing time data that's pretty high. We have a housing market recovery index that shows, we're at pre-COVID-19 levels. What's on everyone's mind with price? Well, I think this is a great quote, and this is something that Quicken Loans released, and they said the pandemic has not stopped the consistent home price growth we have witnessed in recent years. And I really think that this just goes to show how we are recovering. And housing is a major part of our economic recovery. We're seeing that housing is really important to people during this pandemic. Now, there's a large range of projections on future housing prices. So there are 9 experts surveyed from the range of of surveys saying there's going to be a 4.4% increase to a negative 1.1% depreciation. But take a look here, 7 out of the 9, they're calling for positive price appreciation. There is one thing I want to call out though. So if you take a look, CoreLogic, they originally came out with a -6 projection. So they said that prices over the next 12 months, they're projected to decrease, 6%. But then they revised it and they came out with a statement and they reduced it to 1%. And I pulled a quote on the reason why. They said, last month's forecast of a 6.6% home price decline through May 2021 has been revised as projected unemployment rates through 2020 showed improvement. So unemployment got better. That's one thing that caused them to make a revision. Also, the recent rebound of home sales suggests that the pandemic did not derail home buyers who continued to be motivated by historically low mortgage rates. This, coupled with the declining supply of homes for sale, could shield home price growth from the impacts of the current economic uncertainty. As a result, the latest forecast reports home prices will decline a moderate 1% between June 2020 and 2021. So basically, CoreLogic is saying, hey, we thought it was going to be 6%. Based on the latest data with unemployment, and they also saw that how the pandemic did not derail home buyers. Home buyers are now more than ever motivated by the mortgage rates. They took a look at that and they said, you know what? Based on all of that, we feel like with the scenarios in place, the scenario being lower mortgage rates and how consumer behavior did not change, based on that, that's really going to protect pricing. But we still, we want to say we want to cover ourselves and put a 1% decline, very moderate. With all this said, right, we're talking about how people want to return back to the market. The story across the country is that listings are lower than they've been, even though us as agents, we keep bringing listings to the market. We don't have enough inventory. Think of it this way. It's like when we go into Publix and we walk down the paper towel and the toilet paper aisle and there's nothing there. This picture right here is like a store that can't keep our shelves stocked. Even we see more listings, but we still don't have enough because we can't bring homes to market as fast as people are buying, right? So we see consumers getting into bidding wars and we see properties go under contract in just a few days, if not hours. So Move.com says summer home buying season is off to a roaring start as buyers flooded into the market. Realtor.com monthly traffic hit an all-time high of 86 million unique users in June 2020, breaking May's record of 85 million unique users. So when we take a look at the other side of demand, and Move.com says this, we know that people's needs have changed. We know that people are reevaluating their needs. Maybe they need a backyard. Maybe they need more space. Maybe they need an office so they can work from home, right? We know that people's needs are changing, and that even reflects in purchase applications. So that other side of demand is people who are applying to make a purchase. So now, the last 11 weeks, we have seen straight year-over-year increases. Again, I do believe that a lot of this is pent-up demand going into the fall. We're really going to have to keep an eye on this. But, it's pretty safe to say that there really isn't enough inventory for people who want to buy a home. Like I said before, many of my buyers that I'm working with were running into multiple offer scenarios. And what that means is that, somebody, they got the house, but maybe there were 1 or 2 other buyers who were in a bidding war. And these are 2 other people who are still looking. So yes, that home, we have a sale for it, but we still have buyers who were maybe not related to that sale that are still, browsing and still looking. The National Association of Home Builders, the NAHB, they said of American adults considering a future home purchase in the second quarter of 2020, about half are not simply planning it, they're actively engaged in the process to find a home. And now that's a significantly higher share than the comparable figure a year ago, which suggests that the COVID-19 crisis and accompanying record low mortgage rates have converted some prospective buyers into active buyers. So demand is based on interest rate. That's what this quote is saying. And we know this. Due to our economic environment and due to the Feds lowering the interest rate, we know that everyone who is a homeowner or a prospective homeowner is taking advantage of this. People who are homeowners, we see this with refinancing. My father refinanced, Hector's sister refinanced. Thanks again, Hector. We sold Hector a condo in Boca Raton, his second condo, and it is an investment property for him. It's cash flowing. I do work with investors, so just a side note, I do have to put that in there. But as we know, a lot of people are taking advantage of the low interest rates because they don't know when the interest rates are going to go back up, right? So strike when the iron is hot. We know that when the economy improves, that interest rates are going to start to creep back up. So take advantage of where rates are now. And that's why a lot of people are, not just planning in and dragging their feet, but like actively engaged. They have a pre-approval, they have a pre-qualification, they sent pay stubs, they sent everything to their banker, and they're ready to go. They're ready to write an offer. So that's why we see a lot of bidding wars happen and a lot of activity in the market. Now, I want to cover, why people are moving, right? And cover some specifics on almost like consumer behavior and how people are thinking about it. So this is a survey from Realtor.com between April and July. And in April, they surveyed and they said, what would you need in your next home? And people said more space inside and outside. They wanted updated kitchen, and they wanted better technology. Better technology could be things such as smart home, could be smart appliances like a thermostat, connected devices like a refrigerator that has Wi-Fi built into it, smart washer dryer. You get it, right? So that was in April, and now in July, it's funny to see how people's needs change going through a pandemic. So in July, the top 4 reasons when surveyed, people are saying that they want more space, which we know everyone's been inside during this entire pandemic. We could all use some more space. But another one is the desire to own. So personally, I think that this is maybe a lot of renters, people who are renting or people who are leasing right now. They see what's going on. They see the uncertainty of renting and owing money to a landlord. And, what if they don't have income coming in? A landlord could get you out in a quick amount of time. Whereas when you own something, it becomes a foreclosure process where it really becomes a process to foreclose on a house and to get the owners out and all that stuff. Whereas if you're a renter, it is a pretty, I wouldn't say simple, but it is a streamlined process to evict a tenant versus a homeowner. Number 3, we are seeing people who are moving from city to suburbs. I'm working with 3 clients who live in New York City right now, and they are moving from Brooklyn, from Manhattan, from the financial district down to Miami, Fort Lauderdale, the Hollandale area, just because they don't want to live in a crowded environment anymore. They really have fears of living in a crowded place, and they need more space. They need more outdoor space. So we are seeing this come from actual data. The data is telling us that people are having different needs now. And another big driver I want to call out is the remote work. I know Spotify, for example, is on a work from home until, I believe, 2021. We see that Facebook shifted a lot of people to work from home. So another survey from Realtor.com asked, are you planning on buying a home because of your remote work? And this is very interesting. So this one says that 2 out of 3 prospective buyers are planning to buy a home that fits their needs for remote work. This isn't saying, hey, I'm remote now, so I need to go and buy a house. That's not what's saying. It's saying that, hey, I am looking to buy because there might be an opportunity for me to work at home again. Or if something happens, I need that option so I can work from home again. I can't have background noise, or I can't have people doing dishes in the background on a conference call, um, so people are taking into account, the work from home that was really far and few between pre-COVID. It was almost a rarity, oh, I get a work from home day, or oh, I get a summer Friday and I can work from home. But now this is really the norm. So we're even seeing work from home being considered as part of buyer and consumer behavior. Now, there is something very interesting, and it's a quote from John Burns Consulting. And for those of you who don't know, John Burns is a consulting firm. They work with these big companies. They work with builders, they work with hedge funds, they're consultants, and they really advise for large companies, and they help them make decisions based on their business. And what John Burns Consulting is saying is, as states, cities, and counties around the country slowly reopen, we predict the Great American Move, for safety reasons, financial prospects, life change improvements, personal comfort, and employment. We expect a surge in household and business relocations over the next few months that will provide new strategic opportunities for the real estate market. So let's talk about this. We had a pandemic. We're still in a pandemic, but we're slowly we're seeing economic recovery, right? We have the data to prove it. We have the data to prove that consumers are changing what they want in a home. We have the data to prove that buyers are thinking about remote life and remote work, right? So then John Burns is taking all this data, and they're predicting that over the next few months, we're going to have what's called the Great American Move, right? And this is really fascinating because things are improving in housing, and housing is actually a driver for economic recovery. So it's really fascinating. It's very interesting how it's not 2008 where real estate was a driver in the decrease of the housing. This is really fun to see how real estate is improving, and we have all these opportunities to increase and make the economy a little bit better, right? So one other piece of data and a quote that I want to bring up is from Adam Data Solutions, and they released a Q2 2020 U.S. home sales report. And they say that home sellers nationwide realized a gain of about $76,000 on the typical sale, and that's up from $66,500 in the first quarter of 2020. And it's up a little bit from $65,250 in the second quarter of last year. So the latest figure based on median purchase and resale prices marked yet another peak level of raw profits in the United States since the housing market began recovering from the Great Recession in 2012. So what that's saying is that even though we're in a recession, home prices and home values are still going up, right? We talk about equity in the home, and a lot of people have really stewarded the equity in the last 10 years. We see people doing different things with the equity, making different decisions, cash out refi, like those sort of decisions to steward the equity in the home. So what that means is that if people own their property now and they need to make a move, they have options. Also, if people own a property and maybe they're in forbearance, so what forbearance means is that they couldn't make their payments in maybe February, March, and April. What the bank did is the bank took those payments and they did a couple different things. Maybe they added the payments and they gave them a 90-day forbearance on their payments, meaning that they didn't have to pay for 90 days. But keep in mind that the bank might take those 3 payments and they could add them to your next month. So for August, they might say, hey, your 3-month forbearance is over. Now you need to pay the 3 months back, which isn't cool, right? You just going to have all this money pop up out of nowhere. Another thing that they could do is they could take that payment, and instead of putting it in the August, they'll add it to the end of, let's say you're on a 30-year mortgage, they'll add it to the end. So on the 30th year, that's where that forbearance payment needs to be paid. But what I'm trying to get to is I'm trying to say that for those sellers in those situations, if they unfortunately did lose a job and they own a property, this is telling us that people do have equity in their house. So we're not foreseeing a huge foreclosure crisis, right? People are going to be able to sell, whether that's they're selling on a market, whether that's they're doing a quick, cash sale to a cash home buyer. People will be able to potentially sell their property and break even or make some money if they are in a predicament where they have to sell and they have their hands tied, just based on the situation. And again, I am a licensed realtor in the state of Florida, but I am a full-time investor in the entire United States. I have purchased property all over in Ohio, Cincinnati, Maine, Northern Florida. I think the wildest place that I've ever bought is Mississippi. I bought a house that had a basement full of tires. Like literally when we sent the photographer, it was full of tires. So the reason I'm saying that is, yes, I am licensed in Florida to help home buyers, but I help homeowners all across the country. Every single day, I'm on the phone for at least 5 to 6 hours talking to people who are in these sort of situations. So this is good news. The good news is that for those people who need to sell and who need to get out of the property, there is equity there and we can make something happen. So we talked about buyers, we talked about sellers and how sellers do have some more equity in the house because they're gaining equity just from everything that's going on in the market. As we move into the fall, I wanted to share my updated buyer and seller guides. These guides will be coming out on September 4th. I update them almost every season with the latest data and trends that I'm seeing. You can check out the summer buyer and seller guide. It's on the blog already. The link is on my Instagram bio, but make sure that you check back for the September 4th guides. So I just want to say thank you everybody so much for hopping on the August 2020 monthly market report. The biggest thing that I would love is if you could please shoot me a DM with any feedback, anything that you really liked, if there's anything that I could do differently, if I could talk slower, talk faster, more slides, less slides. I am seriously open to any feedback just so I can continue to improve these and make them better every single month. If you have any questions about real estate here locally in the South Florida area or across the country, please don't hesitate to reach out, shoot me a DM. I work with sellers all over the country and I really specialize with buyers down here in the Miami area and the Broward area. I hope everyone has a great rest of their August. Stay safe and I will see you next month.